if you bought a home or you're trying to buy a home, family. We don't want you to get upset about the video about to show you, but you need to understand it's a cautionary tale. But as a veteran, you may want to buy a home, and you might want to go in there and you may want to use your tax exemption if they offer it in your state. Also, now listen to what Rage Pepper said. Also, one tax-free exemption on one vehicle, regardless of value. Now, we have to pay $3 on the first one, the rest full price. That's in Texas. But Rage Pepper is in Alaska. Now, Thompson say, greeting to all veterans. Yes, if you don't mind telling us, how did you find the channel and what's your branch of service and state or country you're currently living in? I am the H-Town vet, and my state is Texas. I was born and raised here, moved back here eventually, and I was in the U.S. Army. We don't rank people based on your branch. We love all of the branches. How does somebody say when they're trying to get out of mind? My best friend was in the Navy, but we never see you with your best friend, H-Town, huh? Everybody show love to Ed Thompson. Yes, indeed. Reading. Yes, indeed. Family, let's deal with these property tax. Are the property tax in your state considered high? We've went over them. I don't have time to do it today. You know, we didn't set up to do it today. We'll go over another time. But they're pretty high here in Texas because we have no state taxes, so they charge a lot on property tax. So family, let us continue. Property tax, let's talk about it in these VA benefits and that award level. So several states offer total property tax exemption, including Texas, Arkansas, Florida, Maryland, Michigan, New Hampshire, New Jersey, New Mexico, Oklahoma, Pennsylvania, South Dakota, Nebraska, Virginia, Connecticut. They have different requirements. Some you got to be 100% permanent total. Some you got to be a paraplegic. It's up on the screen here. So that's what I'm talking about tonight. And there might be a few more that we didn't add here. You need to do your due diligence for your state. Now listen, A. Thompson say, I have been following your content since it recommended by Raider HQ, USMC. Yes, it's the United States Marine Corps. Respect. Thank you. And I recommend his channel too. Now listen, Betty Bob say 10 likes, 10 watching. So if those of you that don't know about Raider HQ's channel, go over there and subscribe and support his channel. Now what we don't do, we don't say, hey, I'm about to leave here and go over there. Or when you over there, don't be saying, hey, I like you, Raider, but I'm going over there to H-Town. We don't do that on lives, okay? So we stay focused on what we're doing. We respect each other's channel. But it been very helpful to me. Now listen what Betty Bob say. We got 10 likes, 14 watching. Please click that like button, like it owe you rent. Oh, click it like you're doing a drive-by. Oh Lord. Please subscribe into the family. Yes, and please come on, subscribe and get in there with us. Come on, walk with us a while. We're gonna tell you information. We have an extremely competent chat. Charlton say Pennsylvania got 6% sales tax, 7% state income tax. Pennsylvania is a tax state for freedom. Wow. And I'm gonna tell you, Virginia, when I was up there, they're a Commonwealth. Now let's go into it, family. Oops. You filed for your property tax. You thought you got it. You bought the house. You put your exemption on there and things didn't work out. They still sending you a tax bill. Oops. What you do? You get shocked. Whoa, wait a minute. Hold on now. Wait a minute. That's going to throw you off guard. When it comes to VA benefits, you better be very careful with any VA benefits, whether it's a rating, because they'll try to come back and reduce your rating, whether it be a benefit that you you were qualified for, but then they come back and say you got to pay for this. Hold on, I got this here. We're gonna explain the trick bag today. Can we do it? Can we talk, family? Don't get caught off guard. Oh Lord, what did H-Town say? Not just when it comes to what people tell you, but when it comes to your benefits, what people tell you you qualify for. Oh, we're gonna submit the paperwork, verify information that anybody tell you, because it could cost you your money, and then double check it. You hear what H-Town said? You better have a check. I remember Richard Pryor, he said he didn't just have an accountant, he had an accountant watching the other accountant, and he was watching both of them. Huh? He would call him in the middle of the night. Now, you say that was what, 18 million? What you say? Yeah, you gotta watch, verify. Now, Rage Pepper say, sorry, I gotta bounce to medical appointments. I want you to be safe. Y'all take care and wish you all the best. Now, he's saying he's going to a medical appointment. That's cool. But other than that, like don't divert off the channel. Now, great job. We want to wish you the best. Let us know how it go when you get back. Status update, family. That's why, Betty Bops, you need to go in there and get your award letter and make sure you look over the one we went over today to make sure they have all the pertinent information, that all your disabilities, and when you receive them, your address, your name, they may have something else on there. Check all that. Make sure everything's proper. Get an update when it comes to you. Oh, what an update you need. You need proof that when you file for that 100% exemption on your property tax, where you pay total tax exemption, that it went through, that it's reflected, not just with the tax assessor office, also with your mortgage company. Why? Because your mortgage company, you might have it where it's escrowed in your taxes. They might keep paying taxes. And the tax assessor office, even though you got a full exemption, they might keep getting the money anyway. They ain't gonna keep it all, so we gonna let this play. Oh, did you hear what I said? See, H-Town bring you the real information now. Wish him the best. Here we go. What do you need? I'm gonna go into that in a minute. Okay, we'll go into that. First, we're gonna go, because that's what proof of what? Future proof when stuff come up. Hold on, give me a second. We'll go over that in a minute, because I want to go over this here. Here we go. This gentleman here, this veteran, retired veteran, what is the situation? What happened? We're about to talk about it. Family, can we talk about it? He put a tax exemption on his house. So why is it saying on this, how my $1 million home, $1 million home is gone? How can a disabled veteran $100 million home be gone? What? What is that? I'm confused. How can a $1 million home that a veteran was paying the proper mortgage payment be gone? Well, we're about to explain. I don't know if it's gone yet, but we're about to explain, okay? We're about to break it down like only H-Town can. This happened, this news came out, I think, 5 days ago. Oh, I see y'all listening. Let me get my stuff straight. Let me know, put speakers in the chat if y'all can hear, because you need to be aware of these things. How can he afford $1 million house? Wow. They said it's $1 million. I don't know. Oh, hold on. Is my sound okay? I didn't know the music was still on. Was my sound okay? Let me know, because sometimes the music messes things up. Let us know. Give me a second here. Okay, family, we back and we about to get into this. So the sound is good. Okay. Even with the speakers. Okay, that's good. Even with the music in the background. Okay. Oh, she said, is my sound good too? Okay, U.S. Army grunt. I bet the payments had to be super high, 10,000 per month or better. I don't know if his house was that much. We about to find out. We about to get into it, family. Did you hear what I said? Say, oh, shipmate means video. Okay. So the video sounds good. Here we go. Here we go. We about to get with the, pull it up here. As we said, family, fair use, fair use. This is for informative and educational purposes only, to make sure veterans don't make certain mistakes, and always be mindful and guard their VA benefits, and don't trust anything somebody telling them. Verify and then double check. Verify. So fair use, fair use. Okay, here we go, fam. Let's listen to what's going on. So let's listen to this, fam. Y'all ready? Here we go.
A paperwork mistake and fight between a suburban veteran could lose his home. A paperwork mistake and fight between the county and his bank have put it at risk.
Yeah, a lot. And hopefully we have stepped in at the right time and can help him save his home. It's now.
So it's a fight between the mortgage company and the people dealing with at the tax assessor office, the city. 6 million lost by seniors by scams last year. Wow, that's crazy. Here we go. Listen, fam.
In foreclosure, we first met Martin Guest a year ago, facing a $10,000 plus property tax bill. Since then, things have gotten so much worse.
If I have to get out of here, I don't even know where I'm gonna go. Literally, I have no idea where I would go.
A suburban homeowner and military veteran is facing the possible loss of his home after a prolonged series of administrative mistakes, misapplied records, and unresolved coordination failures between a county government and his mortgage lender caused the property to be placed into foreclosure. The situation developed gradually over more than a year. And
so one thing, it doing gradually over a year, we shouldn't apply for stuff and then go sit back and chill. And I'm not trying to beat up on our brother here, but you need to, as soon as you do stuff, follow up, double check, triple check until you got something in your hand. Did you hear what I said? I want y'all to listen to what I'm telling you. Fam, until you got something in your hand, I want you to listen. One you want in your hand, something that shows that you qualify for the tax exemption. They call it a DVX approval letter here in Texas. You get your version of that in the state that you're in. Whether you get partial property tax exemption, you want that DVX approval letter and the date. We kept all the other information off, of course. Now, then when you get your tax statement, look up to the right where it says you get the homestead exemption, veteran exemption, 100% exempt vet. Then say, don't trust that. Go down to where all the taxes are and look to the right in that box to the left, 000, February 26, 20, whatever, 0000. You're looking for all zeros. One time they charged me like a penny. I don't know why. I didn't have to pay it. Y'all better be careful. You hear what I said? You need something showing that you qualify for it and something showing that they applied it properly. I hope that's clear, fam. Huh? H-Town over here trying to break it down. Can I do that? Can we talk, fam? Because you want to be great. Now let's get back to it. Fair use, fair use. Now listen, what I just told you, and listen to his situation, because I want you to have a mindset of what's going on.
And centers on repeated failures to properly apply a legally granted property tax exemption, even after multiple official confirmations established that no property taxes were owed. The homeowner, Martin Guest, served in the United States Army for 21 years. Following his military service, he returned to civilian life and became a single father, raising a teenage son.
I don't think it's $1 million house. It could be, depending on what neighborhood it is. I don't know why they put that man business out there. I think they did that to be salacious.
Seeking long-term stability and a permanent place to live, Martin decided to purchase a home that would provide consistency for his family. His goal was to secure housing that he could afford and maintain while raising his child, without the uncertainty that can come with renting or frequent moves. In the summer of 2023, Martin purchased a modest home in Glenwood, a suburban community near Chicago. The property
So he's in Chicago. It's a modest home. So it wasn't no, I don't think it's no $1 million.
was sold by another disabled veteran, and the transaction was completed through standard legal and financial processes. At the time
Okay, that's right. Chicago being one of my state location. I apologize. Yeah, I'm in Texas. I'm thinking Texas. I apologize.
of purchase, Martin qualified for a property tax exemption under state
Let me go back over that part.
legal and financial processes. At the time of purchase, Martin qualified for a property tax exemption under state law due to his disability status. This exemption is designed to reduce or eliminate property tax obligations for qualifying individuals. And in Martin's case, it meant that he should not be required to pay property taxes on his primary residence. When Martin moved into the home, there was no
it said that he would not pay property tax on his primary residence. Depending on the state, it's your primary residence, where you live the most, where you get the total tax exemption.
When Martin moved into the home,
Hold on. I want to hear that part again.
and in Martin's case, it meant that he should not be required to pay property taxes on his primary residence. When Martin moved into the home, there was no immediate indication that the exemption would become a problem. He began making his mortgage payments as required and expected that his housing expenses would remain stable. The home was intended to be a fresh start, a place where he and his son could settle and build a routine without ongoing financial uncertainty. Within months of moving in, Martin began receiving official correspondence related to the property. Among these communications was a property tax bill issued by Cook County.
So how long before he started getting them? He ended up getting these bills. Okay, they didn't say nobody verified to make sure from the mortgage company, or was it from the tax?
Correspondence related to the property. Within months of moving in, Martin began receiving official correspondence related to the property.
So official correspondence, let's see what it was about.
Among these communications was a property tax bill issued by Cook County.
So the Cook County, the tax assessor, whatever they call him in Illinois, sent him a tax bill.
The bill totaled approximately $10,000.
Within months of him moving in, a few months.
The amount immediately raised concern, as it directly conflicted with Martin's understanding of his exemption status.
So he had a form with his bank, and right there, right above the little house thing, that's part of his form.
Based on his disability classification, he should not have owed any property taxes at all. The arrival of the tax bill marked the beginning of an ongoing and escalating problem. Martin contacted county officials to address the discrepancy. After reviewing the situation, Cook County acknowledged that the tax bill had been issued in error.
Okay, here's the problem, family. Because they sent him a tax bill, you following me? Even though he wasn't supposed to get one, then admitted that, you know what, it's our bag, we messed up, we shouldn't have gave you a tax bill for $10,000, but they sent it to the mortgage company. Now the game has changed. So regardless of you saying you sorry, you sent one not just to me, because my taxes are in escrow, the brother's taxes are in escrow with his mortgage payment. My Lord. Huh? So if you have a disabled, you have 100% when you move into a house, don't escrow no taxes, because you're not gonna have no taxes. But because of the VA home loan, you might have to escrow taxes, even though you may not have to pay them, because I think it's a requirement with a VA home loan, even though you might be 100% disabled veteran and don't pay him. So that's the trick bag.
The county determined that Martin's exemption had not been properly applied to the property at the time the assessment was made.
They're showing a shortage of $1,500 a month. And
For the last 5
because
months,
they
right?
have incorrectly put this in, they have now put him in foreclosure.
To correct the mistake,
Oh, you heard it right. They had put his home in foreclosure because there was a shortage on taxes. Because they connected the taxes to the mortgage payment. If you don't pay the taxes that the mortgage company pay for you in escrow, that's part of bringing it into foreclosure.
county issued a certificate of error. This document formally stated that the original property tax assessment was incorrect.
So meaning he wasn't supposed to be charged anything. It don't matter at this point. They in error. You're gonna be the one had a problem. Why? Now it's not a problem if the mortgage company send the escrow money, they pay the taxes and you pay them back, right? If they send the tax money, you listening to me. If they send the tax money to the tax assessor office at the county or city, municipality, and they send all the money back, no problem. But do you think they sent all the money back? He didn't owe anything. Let's see.
As a result of the correction, the county reduced Martin's property tax obligation to $0. The certificate of error confirmed that Martin did not owe property taxes on the home and that the original bill should not have been issued. Although this correction addressed the immediate issue with the county's records, it did not resolve the broader problem.
So updating something on paper don't solve the problem. And we'll get to y'all other statements, okay? Let's see. San Diego Marine say, evening, veteran family. Glad you in here, brother. Glad everybody show love to him. So listen to what our brother Charlton said. Right, H-Town, the yearly mortgage interest statement, IRS Form 1098 says real taxes paid, but not to who? Come on now. Now let's see what Betty Bob said. Betty Bob says its location and the house look like crap in Elliott City, Maryland. They are $1 million homes. Oh, okay. Okay. It's the location. Yeah, they say the three things you should be concerned about is location, location, location. Everybody show love to our brother San Diego Marine. I don't know if male or female. Go ahead. Let's continue.
Martin's mortgage lender, U.S. Bank, continued to treat the property as taxable. The lender's internal records.
So even though the tax office did not treat it as taxable, his mortgage company did. So you got two different groups. He's stuck in the middle and he's facing all the consequences.
Did not reflect the county's correction, creating a disconnect between the official tax assessment and the lender's accounting. Because the lender believed property taxes were owed, those amounts were included in Martin's monthly mortgage calculations.
Now, here's the thing. What he wasn't showing and what I had to learn, what I learned after dealing with the VA is this. Oh, boy. Here we go, family. Did he have that, we call it in Texas, the disabled X approval letter? He could have sent that to his mortgage company and then verified with the tax assessor office their statement saying he paid zero taxes. I would have demanded all that. That's what I did. I don't trust them. You do your due diligence to the best of your ability. Okay?
Property taxes are often collected by lenders through escrow accounts, with the lender paying the taxes on behalf of the homeowner. In this case, the lender's belief that taxes were owed caused Martin's required monthly mortgage payment to increase significantly. The inclusion of non-existent tax obligations nearly doubled Martin's mortgage payment. This placed a substantial financial strain on his household. Despite the increase, Martin continued to make his payments, believing that the issue would be corrected.
So he continued to make his payments, thinking that the issue would be corrected. You don't trust nobody when it comes to your business, not the tax office, local tax office, or the mortgage company. Oh, it's going to be all right. Never do that. And I'm just saying this is a cautionary tale. My brother did everything he could do. I would have done if I didn't know better, because, we just thinking you do the right thing, it's going to work out. Been burnt too many times.
Once the proper documentation was reviewed and applied by the lender.
So he thought it was going to be all right. Now listen to this here.
Believing that the issue would be corrected once the proper documentation was reviewed and applied by the lender. Over time, Martin continued.
He thought it was going to be all right. Gee, how can you prove a negative, right? You get that letter.
To receive correspondence related to his mortgage and escrow account. The paperwork reflected the inflated payment amounts and indicated that taxes were being collected and paid on his behalf. This continued even though the county had already confirmed that his tax obligation was zero. In August of the following year, the Cook County Assessor's Office issued another letter addressing Martin's situation. This letter explicitly confirmed his property tax exemption status. It stated that Martin was exempt from paying property taxes due to his disability, and that the exemption was valid for the property.
The thing is, just getting letters don't mean nothing. You have to actually do your due diligence and go up there and raise some sand with the mortgage company taking it. You can't sit back. I'm not saying he did, but once you get in the trick bag, it's hard to get out.
The purpose of the letter was to provide clear, authoritative documentation that could be used to correct any remaining errors. The confirmation letter was provided to U.S. Bank. Despite receiving this documentation, the lender did not update Martin's account to remove the tax charges. The bank continued to list him as responsible for property taxes and maintain the higher mortgage payment that included those charges.
You about to find out why he was still being charged. This is on the slick side of the game, dealing with the tax assessor office.
During this period, U.S. Bank paid property taxes to Cook County on Martin's behalf. These payments were made automatically based on the lender's internal escrow calculations. The payments occurred even though county records showed that Martin owed no property taxes. When Cook County processed the payments, it issued a partial refund to the mortgage company. The refund...
Oh, partial refund. So even though he didn't owe no taxes to Cook County, they didn't just send all the money back. They did a partial refund. Why would they do a partial refund? Why didn't they give back the mortgage lender the whole amount since he didn't owe any taxes, this disabled veteran?
Did not cover the full amount that had been paid in error.
Listen to this.
Fund to the mortgage company. The refund did not cover the full amount that had been paid in error.
So when they got the money back at the mortgage company, they didn't get the full amount back. Why?
The reasons for the partial refund were tied to administrative processing rather than a determination that Martin owed any portion of the taxes.
So guess what they did? They did a processing fee over at Cook County tax office. So they say, yeah, you know, he don't owe no taxes, but we sure can hit them fees on him. And then we'll give you what's left over back to the mortgage company. The heck with how it affect the veteran.
Ever since I've been in this home, I have never missed a payment.
The partial refund created additional complications. Because the lender did not receive a full refund, its records showed an ongoing shortage in Martin's escrow account. This shortage was not caused by missed payments or underpayment by Martin. Instead, it resulted from the lender paying taxes that were not owed and not receiving the full amount back. Over the course of several months, the lender documented what it described as an escrow deficit. According to individuals familiar with the case, the recorded shortage amounted to approximately $1,500 per month. This shortage accumulated over roughly 5 months.
$1,500 a month. My God, cold game, San Diego Marine says. Now listen to Charlton said that's messed by Maryland tax assessment. That's messed. Okay, yes. Oh wow. How is everyone doing? Doing good.
Creating a substantial balance that the lender considered unpaid. Despite this accounting, Martin had not missed any mortgage payments. He had paid the amounts billed to him consistently since purchasing the home. The alleged shortfall existed only because of the lender's continued inclusion of property tax charges that had already been invalidated by county officials.
So just because they invalidated, that doesn't change. The mortgage company won't, hey, we didn't get all our money back from the tax assessor in Cook County outside of Chicago. So guess what? He $1,500 a month, clocking up with interest, with fees. We have Jason M. Everybody show love. Say, hey, fam. Yes, indeed.
Based on the escrow shortage reflected in its records, the lender treated Martin's account as delinquent. As a result, foreclosure proceedings were initiated. Martin received a foreclosure notice informing him that his home was now officially in foreclosure.
Now, this is a man that hadn't missed the payment. Now, I don't know if he paid the extra with the taxes and stuff because he didn't owe them. So if he'd have paid them, he probably would have never got that money back. This is from a week ago, fam.
Due to the alleged payment deficiency. The foreclosure notice significantly escalated the situation. At the time it arrived, Martin had been living in the home for approximately 1 year. Throughout that time, he had made all required mortgage payments. The foreclosure was not triggered by a failure to pay, but by unresolved administrative errors tied to property taxes that he did not owe.
So if it's an administrative area from the property tax office, tax assessor, whatever they called it in their area of Chicago, near Chicago, why he the one getting punished? Why is his house put in foreclosure? Because they wanted that little fees from processing it. Greedy, right? And then what's the name say? They don't care. We just blame the homeowner. That's what the mortgage company said. Betty Bob said we have 15 likes and 12 watching. Thank y'all for being here, family. Now listen, we need to cover serious problems like this so we understand what's going on and how we can get caught up even when we're doing everything the right way. Now listen to Charlton. I had trouble with my county tax assessor back in 2010. The tax assessor came over the table and yelled at me. Appeals court yelled, troublemaker. Whoa, you didn't give him that 5-finger discount, did you? Charlton, did you give him that 5-finger discount? Oh man. Now San Diego say that has to be mentally draining. Yes, because he has no control over what happened because the mistake wasn't made by him. Now listen, Martin says hopefully he sues and gets a lot for anxiety. Yes, that's but how can you really sue the property tax people like that? Maybe. Charlton say the property tax in Texas are quite high. Yeah. Quite high, family. On my home, I probably had to pay close to a month, $800 to $1,000. Thank God for the exemption. Martin say, or the one finger salute. Oh boy, you cutting up. I gave Navy. Oh, you gave Navy a salute. You gave the Navy salute. I don't know what that is. Y'all dangerous.
Upon receiving the notice, Martin expressed concern about the possibility of losing his home. He worried that he and his teenage son could be forced to leave the property. He also considered the impact on their emotional support dog, which had been part of their household during the transition into the home. The threat of foreclosure introduced immediate uncertainty. Martin faced questions about where he and his son would go if the foreclosure process continued. The situation was especially difficult given that the home was intended to provide long-term stability after years of service and sacrifice. Since moving into the property, Martin had not experienced the stability he expected.
So you know the brother, he's a retired, 21 years he did in the military. I think it was the Army. I forget if I'm wrong, I apologize. But he wanted to relax. He got his son there, he got his support dog, and it's been drama since day one. Fam, let's talk about it. Let's see what's up. Let them talk.
Instead of settling into the home, his time there had been dominated by official letters, billing statements, and legal notices. The ongoing issues prevented him from feeling secure in his housing situation. Those assisting Martin emphasized that the foreclosure process was advancing, even as efforts were underway to correct the underlying errors. Although the tax exemption had been confirmed multiple times, the foreclosure proceeded on a separate timeline, governed by lender policies and legal deadlines.
So hold on, how you got two sets of laws? That's why I like what Martin says. The VA should offer free legal support for cases like this. I totally agree. That's why I think being a disabled veteran should be a legal status. That way they'll be discriminated against the disabled. It should be a legal status. Or you being disabled, period. You should be able to file that they're discriminating against you as a veteran and a disabled veteran. You had to get a bail money for me. Oh, you be cutting up, huh?
In response to inquiries about the case, the Cook County Assessor's Office acknowledged that errors and missing paperwork had contributed to the situation. Officials stated that the exemption was valid.
Contributed to the situation? You mean his house being going toward foreclosure? Situation? The exemption was valid? All these government words? What do you do when you have you ever been caught up in government red tape and chaotic, and you was caught in the middle between two government agencies? Let us know.
And that the issue would be corrected. However, no specific timeline was provided for when all records would be fully aligned or when the lender's account would reflect the corrections. The absence of a clear resolution timeline created additional concern. Foreclosure proceedings operate under strict schedules, and once initiated, they can continue unless formally stopped.
What's formally stopped? And they sitting back at the tax assessor's office. Nobody probably got fired, not doing nothing to help this man stop his home from going into foreclosure. He won't be able to qualify for another home if it goes into foreclosure for a long time. What happens to his exemption? Well, he can't use it because how you gonna get a home unless he pay cash for it? This is crazy.
Raised the possibility that the foreclosure could advance faster than the administrative corrections needed to resolve the tax discrepancy. At the time the situation was reviewed, Martin's home remained in foreclosure. Although county officials indicated that the exemption issue would be fixed, the foreclosure filing had not yet been withdrawn. This left Martin and his family in an uncertain position, unsure whether the corrections would occur in time to prevent further action. A letter from the Cook County assessor was sent directly to U.S. Bank's tax department in Minnesota.
So the tax assessor is they sent their information directly to the mortgage lender. Why don't they send back those fees that they charged them? Since they charge fees, even though they weren't supposed to take the money, instead of sending the whole amount back to the mortgage company, they took the fees. So you think that it only gave them back a partial payment to the mortgage company? You think they want part of the money? Don't give them no letter saying, well, it's this, this, and that, and you kept part of the money. Give them all the money back and the fees. The news coverage probably made someone fix the problem faster. I hope so. Greed from Brother Jason. And Martin, I hope so, Martin.
Letter outlined Martin's exemption status and addressed the errors that had led to the incorrect tax charges. It was intended to prompt the lender to update its records and remove the charges from Martin's account. Despite repeated outreach, U.S. Bank did not immediately respond regarding the letter or the foreclosure status. The lack of communication added to the difficulty of resolving the issue, while the foreclosure clock continued to run. Those involved in assisting Martin expressed hope that intervention had occurred at a critical moment. They also acknowledged that until the lender formally corrected its records and halted the foreclosure process, the risk of losing the home remained. The case illustrates how administrative breakdowns between government agencies and financial institutions can have serious consequences for homeowners.
Well, who I blame, and y'all have your own opinion, I blame the tax assessor, the government agency, the tax assessor office that did not send the whole amount back to the lender, the bank that he financed his home with. Because when they didn't send it all the way back, they like, well, we're not going to take a loss. They being greedy, taking a little extra money out well, we're going to get you on an administrative fee, even though he don't owe no taxes. Since you sent us a letter, you're going to have to pay for sending us the letter. Even though it's our fault, you sent us the money anyway.
In this situation, paperwork errors, delayed corrections, and misaligned records resulted in foreclosure proceedings against a homeowner who was legally exempt from the charges that triggered them. Throughout the process, Martin maintained that he had fulfilled all of his responsibilities as a homeowner. He purchased the property legally, qualified for the appropriate exemptions, and made every required mortgage payment.
So when he qualified property, he paid everything that was supposed to be paid. How can you win if you did everything right? And apparently I hadn't watched the whole thing, he did some of his due diligence, but you got to check right off the bat and get a paper from them showing that you have.
The problems arose solely from how those exemptions were processed, recorded, and recognized by the institutions involved. As the situation continued to unfold, Martin and his family remained in limbo. The outcome depended on whether the necessary corrections would be implemented before the foreclosure process advanced further. Until that happened, the home he purchased in hopes of stability remained at risk, highlighting the lasting impact that unresolved administrative errors can have on individuals and families.
If I have to get out of here, I don't even know where I'm going to go.
Now, the assessor responded to our story acknowledging the errors and missing paperwork and promised the issue would be corrected. But here's the problem. The clock is ticking and it's unclear how long this will take. Guest home is already in foreclosure, and there's a real fear here that the process could move faster than the corrections, putting everything is fought for at risk.